This is not a drill. What you are about to see is classified information.
We've got many economists, one coming this afternoon from Brookings, who says that there is a recession. Are we in a recession now?
We are in a serious slowdown in the economy, which has very significant consequences for the public, and whether it's called a recession or not is of no consequence.
Sworn to secrecy.
Let's talk about the speed with which we are watching this market deteriorate. We're red everywhere, essentially, down by 4-5%. And
Market collapse.
What started in America last year has now spread to every part of the world.
We're down 9% today. The Xetra DAX over in Frankfurt is down by 9%. The Paris market down by 9%. Austria.
See the truth.
This could be the most serious recession in decades. And that means life, as most Americans know it, is about to change, in some cases dramatically.
Good luck.
What is going on, YouTube? It's Brendan from Market Makers. Guys, I have a fantastic pattern for you today. This market, if you notice the thumbnail, the crash of 2024, this market is tracking almost to the candle with the Y2K fractal. We're going to go over it. It's so cool. I had Lee message Elon Musk on X just to see if he would reply when we sent him the chart. Lee, come in here a second. Did Elon ever reply to the message?
You know what? He did indeed, mate. He did indeed. Do you want me to just go and play it for YouTube?
Oh, well, what did he leave? Like a voice message?
You know what? Let's just listen to it. Everyone else can listen to it at the same time.
We won't put this in the video. Just play the message. I just want to hear what he said. That's crazy that he replied.
All right, you won't believe it, mate. Here we go.
Brendan, it's Elon. I reviewed your fractal pattern. You should come work for me. You have talent on loan from God. I must warn you, if you share that pattern, the lizards will come after you. They will blow your channel up faster than Biden took out the Nord Stream pipeline. I am your friend. I don't want to see you get Epsteined. By the way, do you think Beyonce is fat and has no talent? Because I do. Call me back.
I don't know if we can put that on YouTube, Lee. He really went after Beyonce there at the end.
I'd be fine. Nothing to worry about.
You know, I guess if the lizards come for me, I guess if you ever hear a story about Brendan from Market Makers being found drowned and then shot back in the head twice, you should probably disappear and tell everybody to unsubscribe from the channel.
Mate, I'll keep an eye on YouTube for all of those 10-second edits of you with lizard eyes.
All right, dude, let's go ahead and start the show.
Sounds good.
If you guys like this channel as much as Elon, definitely smash the like button, hit the subscribe button. Guys, if you want to trade these Ponzi markets, check out our fantastic sponsors, SimpleFX and BingX. With our link, you get our exclusive bonuses as well. I'll pin it in the YouTube comment section with Lee's Telegram, okay? You can message Lee with any questions you may have. Both those sponsors will pay for your first month in our Discord if you want to join the other 12,000 freedom-seeking individuals on our server. Let's go ahead and talk about this. Guys, last video, Lee, show them the thumbnail. They want you poor. I did a long monologue about the economic conditions in the US and how the media, how the government, how the Fed lies to you about the current condition of the market. This video now is going to be the supplement to that, showing you on the charts what's happening. This fractal pattern is absolutely amazing. Let's start off on the S&P. We're on the monthly chart log scale, okay? This is the first bubble. Y2K, first bubble in the last 20 years, I should say. Y2K followed by the GFC and now our current plague bubble that we are in. And let's just look at the drawdowns that you get off these bubbles. Y2K down to the bottom, 50%. Remember, Charles Dow wrote about this 130 years ago about the Dow theory, right? That he wrote articles. He never wrote a book. He wrote a bunch of articles. I have actually all of his original articles as well. But what's the key Dow retracement? Gann wrote about this, the natural halving and doubling in the marketplace. So you see this all the time in bubbles. The GFC actually dropped 57.69%. So 50% drawdown, 57% drawdown. The pandemic dropped us about 35%, so almost a third, 35%. And then we have the current drawdown from this baby bear market that we had, which was just over 27.5%. So that's our current drawdowns we have in the marketplace. Okay. So let's look at this from another perspective, though. This is the monthly log scale, because the part that I want to focus on, guys, is the top of Y2K, because we're repeating the topping pattern of Y2K right over here in the current market. Let's go ahead and zoom in. Looking at this on the daily, guys, this is the daily chart. This is the current marketplace. What I want to focus on are the key pivot points in this cycle. Notice the dates. I'm going to show you this on the Y2K topping pattern. July, that's your July high. Then we had our 11% correction down, okay, to our October bottom. And now we're pushing our way up. I told you, I think Q1, end of March, April, that's when we're looking at this happening for the peak in the marketplace. A lot of events are culminating around that time frame. April 8th is a total solar eclipse. We are in solar maximum. If you guys want to see that, learn about the solar cycles, check out our solar video that we did. Lee showed them the thumbnail for that. That was about a week or so ago. You can check that out, as well as a full moon on the Thursday, the 25th. Okay, that's the wolf moon. Why is that important? I'll show you here in a second with the indicators. But first, July high, October low, run up. Okay, where did we do this before? In the .com. We had July 1999 was our high. Then we came down to our October low. Do you see this? And then we pushed up and ended up making our final high before we cratered 50% win. March 24th. The section we are in now in the current market is right here in that January time frame. So let's just see how this played out. You had your October bottom pushing up all the way to January 3rd. Now, the date that I want you guys to see here, which is really fascinating, you made this low, January 5th. Okay, so keep that in your mind. January 5th. July high, October low, made a new low January 5th after this run up. What did you do in the current market? July high, October low, made a new low right here in this cycle on January 5th. Okay, you're repeating the exact same pattern here. And if you look at these wave movements, this is the current market. Let's look at our price range tool here. From that July high to the October low was an 11% drawdown. And then your wave up, this was our parabolic run up. But is it really that parabolic? Have we ever done this before? Yeah, we did it in .com. So look at this. This is your current high right now. Where are we at? Is that the high? 17%. So 11% down move, 17% up move. Let's look at this on .com. What did we do here on .com? .com, we had our July high down to our October low, 13%. So within 2% of each other, okay? That's your 13% down move. And then all the way up to our January high, 19.81%. So 2 or 3% higher than our current move. We did this exact same move in .com, made a January 5th low, came back up for a lower high. Is that what we're doing right now? Came back up for a lower high, sold off into late February, okay? I think we're going to repeat this exact same fractal pattern. February 28th, you make your low, you push up for your end of Q1 peak, March 24th. And then what happens? Sideways action, market falls 50%. This is something you guys need to pay attention to because it's tracking extremely close, even to the date range perspective. If we take our date range tool here on the .com peak, there's your July high down to your October low, 64 bars, 91 days. And where are we at on this one? Let's go ahead and use the date range as well. July high, October low. July high, October low. We have 66 bars, 92 days. 1 day difference between this move from the July high to the October low. 2 bar difference, 1 day difference between this move, okay? So this is a fractal pattern that's repeating. Now what's interesting is we made that January 3rd top. We made the January 3rd top in in the Y2K pattern, and that would have been over here already, right? So we have the same low, the January 5th low, and you can see we're just going sideways. So we're going sideways here. What I think's going to happen is that the market wants to push up. Let's get rid of some of this noise on the chart. I think the market wants to push up for one more high here before it corrects going into late February. So if we look at this, let's go ahead and put our fib on here that we've been using, our trend-based fib from this move. And I'll show you this target that I'm tracking, okay? So trend-based fib, I've been showing you this in all the videos. Tracking beautifully, 1618, 4604, caught our 11% correction down, and now we're pushing back up, right? The next level up is 4867. If we do end up pivoting more to the upside here before we correct going into February, I'm looking at 4867 as the next level. Obviously, if that got taken out, then you're looking higher, that 4922 level we've been talking about, 4900, 4922. So this is what I'm thinking the market wants to do, is get up to 4867, cement the new all-time high. And the reason this date is here, Thursday, 25th, January 2024, here, I'll go ahead and show you this now. Let's take this fib off. This is the moon phases, guys. Look at the full moons for this. Now, again, I don't trade based off of lunar cycles, but you would be totally ignorant to not pay attention to how many times you've got tops here on these lunar cycles, right? Major top, major top. Look at this corrective move you have down here. This was a pivot down for a low. This full moon, your lunar eclipse, was your exact bottom for this major 9-week rally up. And we have the next moon, the next full moon, which is going to be on the 25th of January, the wolf moon. I think we're pushing up going into the 25th of January. And if you look at this on the Y2K pattern as well, let's go ahead and throw the moon phases on here. You can see you've had some interesting tops here. So here in January, let's get rid of this. This is year 2000. Here in January, you can see you also had a full moon for that second peak. Same exact bottom, January 5th, full moon right up here. And this came down. This was part of your correction into February, okay? Late February, February 28th. And that moved down, by the way. Let's measure this so we can see if we can find this. So from this high down to your February low, 10.35%. If we look at this on our current chart, if we come up to 4867, so let's just go ahead and take this price range here. Let's just say we do come up to 4867, measure this out, 4850, 68. There you go. Let's go down 10.35%. Let's see where this would take you. This would be your correction going into late February, okay? Let's see where this would take you. So 10.35. It's not going to be to the penny exact here, but let's go ahead and measure this. If we have this fib retracement from our rally bottom, right? From our rally bottom up to this 4867, if we can surge up to that level, look where the 618 is, 4396. If we did this move, that's almost a 10% correction going into February low and then rallying up to our March peak. That March peak again could be that 4922 to 5,000 level, right? Just like we did in .com. Did the exact same move in .com. We sold off after we made our peak here in January. You can see we made our peak in January. We sold off into February 28th bottom, rallied back up to our peak in the marketplace March 25th? March 24th, 3 days after the spring equinox, okay? Then you double topped out and the market began its decline and it started breaking down hardcore come the fall equinox in September. You see this? September, this is when the market really started accelerating to the downside. We could see something very similar to this round. So that's what I'm thinking is going to happen here at the market, guys. You're repeating the exact same key pivot points, July high, October bottom, run up into January. After we make our final high in January, or if we just start selling off, you're correcting down into February. Late February, run back up into March, okay? Late March, spring equinox, April, solar maximum, total solar eclipse, April 8th. All of those events are happening in the exact same region and Y2K that we made our all-time high before the market began to fall apart. So that's how I think that's going to play out on the fractal pattern, guys. I think it's really interesting to see this. Let me get rid of all this stuff here. And we'll go ahead and do some TA on this as well. Get rid of these moon phases, pull this down. So I think we have a timeline here of the full moon, wolf moon, January 25th on a Thursday. So that could be this move that you're working on right now. The markets are closed today. Could be this move. It could get another little pullback here and get your W pattern up to the upside. And that's that area, that 4867 is where I'm looking at. If we do move up, that's where I'm looking for the S&P to top. Could it just start selling off? Of course, because it did that. It did that in Y2K. This top right here was a lower high. This top was a lower high and then sold off in the February. So it's not a one-to-one relationship, but the key pivot points, the bottoms and the tops of these rallies are identical to what you did in Y2K. So that's what I want to pay attention to on this. We're going to throw that fib back on here one more time so we can see where our tracking, how beautiful this is tracking. Trend-based fib. Come right back up to this rally and come right back down. And we're going to see how this affects the other markets as well. So you're right now, 4,800 is still your key resistance, 47.99 on my fib. You can see how beautiful that's tracking. The 200% move is at 48.67, guys. And that's that next move up. Could it surge past it? Sure, I guess it could. But I think whatever the market's going to do is by January 25th here for the Wolf Moon. I think that's when it's going to be topping. So we could be going sideways, chopping up and down if 4,800 holds or just slightly above. But I think you got to watch 48.67, watch that lunar pivot, and then look for the sell-off going down into February. So I'm going to personally be looking to trade this move up here in this range between now and January 25th. If we can see what kind of movement we're going to get, we're going to move up to the upside to that target or start printing this as more of a bearish pattern and start breaking down from here, going into a February low, rally up, Q1 peak between spring equinox, around the total solar eclipse, April 8th. It's going to be a fun market to trade. Let's go ahead and look at this. Futures are trading, but the MFI, we're at the median line here on the S&P. Volatility momentum is pretty flat. Momentum's flat in general. So this is exactly what you want to see. Get this nice little kick up to the upside. We'll see how it plays out, guys. Let's go ahead and look at Bitcoin. Bitcoin diamond breakout, guys, 50% move off the trade I gave you on October 23rd. And what happened here? We were talking about this for weeks. Mark, one of the traders in our room, posted this trade as well that he took right at the 618, 48,562. 48,562. You've had a nasty sell-off since then. I'm going to zoom in here. Don't worry. Let's go ahead and do that now, actually. This is a daily chart. So let's see what this decline was so far. Peak to trough was 15.5%, right? So 15.5%. And now you're still back in your Wyckoff trading range here, these two green lines. You're still in this trading range, guys. So if the S&P does want to wave back up again, I think you're going to see Bitcoin come up for a double top. That's what I think is going to happen. So you've made your first wave up, your sell-off down, and now you're going to recover, either make a lower high or make a classic Bitcoin double top where the second peak is higher than the first peak. So that's the move you want to watch. That's your key resistance area, 48,562. That was a big hype for the ETF, guys. The ETFs, they opened up high and then they sold off as well. So this is an area you want to watch. You want to stay above 40,226, or you're going to be starting to break down even more. Okay, so if the S&P moves, the largest market in the world, down to a February low, I'm anticipating Bitcoin is going to be coming down with it. So this is important to see if we do rally up to January 25th here, start making our base, start moving back up, look for a potential lower high here on Bitcoin as it moves up, or if it wants to take out this high, a slightly higher high. Let's go ahead and look at this on the fib, because between the 618 and the 786, we have the harmonic relationship of the 707 and the 1414. That's at 53,326. So could Bitcoin do that move? Well, if the S&P takes out 4867 and it really aggressively starts moving up, you could see Bitcoin wave back up. Maybe you get a pullback here and then wave back up. And you want to watch these levels between that 48.5 and the 53,326. This is your next key kill box in here, okay? So this is how it's going to play out, I believe. Small wave back up in the S&P. Let's see if Bitcoin come up. Look for a double top type pattern. If it doesn't double top and the S&P keeps running with some strong momentum, then look for Bitcoin to come up towards that 53.3 area. Let's go ahead and move forward. NASDAQ, again, it's all about how the fibs are tracking. 200% retracement. Nailed that move here on the NASDAQ for this move down as well. I think this is the trend-based fib layout. Yeah, it is. Let me show you this on the regular fib layout as well, because the 1618 provided an awesome target. So we go over these fibs all the time here. And you can see the 1618, same thing as a 200% retracement, whether or not you're using the trend-based fib, lines up the exact same area. 15,759, you caught this nasty corrective move off the 1618. And you can see price went back up, back tested the 1618, and then moved up. And of course, you have that double top feature on all the indices right now, including the NASDAQ. So if the S&P moves up, guys, if it moves up to 4867, you want to see if the NASDAQ is going to move up with it. And if it does, it needs to flip 17,018. That next level up would be 17,800. Okay, 17,800. So that would be a decent sized move from where it's at now. Let's just take the top of the candle. It's a 5% move. Will it move up that much? May not. It may end up just doing a Bitcoin style double top like this when you have the second top higher than the first top. So your key resistance is 17,018. You want to watch this zone. Watch this zone here between that number and 17,800. But all of this is going to be triggered off of the S&P. Because if the S&P just starts topping and rolling, all the markets are going to start moving with the S&P, including the foreign markets. So that's where we are on the NASDAQ. It's going to open this up. You have the MFI, it bounced right off the moving average. It can come back up, guys. So it's going to be really interesting. What is today's date? Today is the 15th. So really you have basically 10 days. So that's a lot. You have these 4 trading days and then next week to see what happens here in these indices. And I think you can get more bullish momentum out of them, potentially rallying into the wolf moon on January 25th, right? That's what I'm looking at. That makes sense to me than selling off into the February low. Looking at the baby S&P, your key resistance remains 37,799. Look at that stacking candles. This could easily be accumulation or distribution, but right now you're just stacking candles. Your oscillators are resetting, MFIs all the way down, prices holding up, momentum's at the median line. So if this does break out with the S&P, if the S&P pushes up towards that 4867 target, then look for the baby S&P to do this kind of move. And it's going to land somewhere most likely between 38,449 and 37,800. So again, I'm going to gauge this based off what the S&P does. That would be your next key target up there. Don't have a ton of time for these up moves. So you may get one of these candles and then you start seeing it build a top or start failing and breaking down, right? This would be on top of your Wyckoff range. If you get some type of range up here where price just comes up, does this, pulls back down, back tests the pivot, comes back up again and does that, okay? You may get that type of move because essentially we talked about this already, but you have this range that you formed here on the baby S&P, right? So that's something you want to watch for in Confluence. And guys, I wanted to show you the JPN. This is a NIC 225. You can trade this on SimpleFX. It took since 1989 highs. It finally took them out this year. It knocked out the highs from 1989, the big Japanese bubble and equities, and then land. And look at this thing just pumping, pumping, pumping. So now we start looking at targets on this. Pull the fibs down. Look exactly where you're at. 35,957, 35,935. This could get through this 1618. This would be expansion of this Wyckoff trading range. I wanted to see if I have confluence with this. I'm going to do this as well on this higher range here. The 2618 is at 36,309. So I'm tracking the NIC. Some of us on the Discord, me and Miss B and a few others, really enjoy trading the NIC. You can see it bouncing right off of 35,979, but this is the range I'm looking at for the NIC, okay? 2618, 36,309, just beneath it, 35,957, what it's hitting right now. If it stalls out here and pulls back and starts giving us a pattern like a 3-wave top or something we can trade, be great. Now, keep in mind, this market is bullish. The Central Bank of Japan is the last bank still easing, still doing yield curve control. So they're still easing. So you have the market reacting to it, whereas the U.S. markets are topping out. This would just be a retracement type trade if it does pull back down. But right now, it is very bullish, about to get overbought here, starting to curl up on the daily MFI. Momentum is still strong. Let's look at this on a 3-day chart. See what it looks like. On a 3-day chart, you're not moving up that much. So you're not moving up that much. I like to see my indices overbought on larger time frames, making tops like this. This is how you get these larger retracements. So this is divergence as well from this move, because you can see your high here on the MFI, this double top type structure. This was your high on the MFI, which occurred right here. And now you have this move up. So you want to see if the oscillator starts catching up. But if it starts breaking more to the downside, then again, bearish divergence, potentially signaling at least a temporary top coming into the marketplace. A couple more and we're going to bounce. Let's check out the DAX. Stacking candles side by side still, guys. Your key resistance remains the same. Again, hovers all around the S&P. 1618 at 16.9. So if we see this move, this is a wave down. Let's see if we get this wave back up either at 16.9 or slightly higher if the S&P comes up to take out 48.67, forming a new all-time high. I think you're going to get a larger picture double top here. If we look at this on a 3-day, let's look at this on a 3-day candles. You can see this could easily form into a larger double top. Wave 1 up, wave 2 down, come up to some level, right? You've been coming up to this level, 16.78, 16.785. Let's just call it 16.8. You've been coming up to this level. It's been providing a ceiling for you and then selling back off. But if the S&P does rally up, another, what is that? From where it's at, it's another, what is it? 67 points. And then you have, where's the price of the S&P right now? 80. So it'd be almost 100 points. So it'd be another almost 100-point move. You could easily see the DAX move back up. So 16.9 remains your key resistance. Watch for this 3-wave double topping structure here on the DAX. Let's look at this on the 3-day chart, MFI. See, again, this looks like that's what it wants to do. This looks like you came down, you have wave 1 up, wave 2 down, get that last wave 3 up, and then there's your turn down, okay? So watch that zone on the DAX. Let's check the Paris market. Same exact move, guys. Wave 1 up, wave 2 down. Can we come back? Using influence with what the S&P wolf moon. This does the wolf moon sound. I thought I had let me see. Oh, I have gold on here. We'll finish up with gold. So we look at gold, guys, on the 3-day chart. Again, bullish structure, higher lows all the way through. Gave you a couple different targets here on gold. The immediate target, if this low holds, is 2134. I would look for gold to rally potentially with the markets. Again, this has been a kill zone for gold. This area where you're at now, which you still get above, but you're in a bullish uptrend, as you can see. This 2075 areas, amazing trades on shorts. I'm talking hundreds of bars, okay? Amazing trades. So I want to see if we do move up with the marketplace, try to come up to that 1618 at 2134, or if the gold is just going to kind of hover around this range for a while longer. We shall see. My ultimate goal here, if this uptrend were to persist, would be this target up here, 2225. That may be a target that's hit later on because you have to take out this area still. This is a lot of work gold has to do. S&P moves up, gold can move up. It'd be great to take out this fractal high, come up to that 2135. Once again, 2136, as you can see, the 1272. This was your key resistance. If we can retest that, if you start failing there, that's a good move on gold, guys. Always keep that in mind when you're tracking your assets where they have failed at before. All right. Hope you guys enjoyed the video. I'll see you on Thursday for the next video. Hope you're enjoying the long weekend here in the US. Guys, talk to you Thursday.